Investors and traders, welcome to the channel. Today is 23rd of January 2024. I hope everyone is having a great day. In this video, we are going to take a look at the key US tech stocks that we follow. As always, this video is for educational purposes only and it's not a financial advice. So we'll start by taking a look at the Tesla. So this is the daily chart of Tesla. Tesla has been under a fair amount of pressure from a stock price perspective. The price action since stopping in July 2023 last year, it's just been sideways. It's just been making a lower low and a lower high, but also within this ABCD price pattern projections. And also what it is doing is actually say a flag formation here, so you can see this channel, and if it breaks out of it, for example to the upside, then this would have been a bull flag. So what it is doing over the course of last few trading days is it's just here just consolidating at the 78.6% Fibonacci retracement. Now this stock is actually weaker than the market stock because the S&P 500 and the Nasdaq 100, they have been showing good performance over the course of past week. But this stock actually is not performing as well. So with that in mind, it is also kind of consolidating around this level. And one of the things that we were watching for was in terms of the one-to-one price projection, the ABCD. And what we were looking at was this. This is a low-to-low cycle. So I took this low to this low and I projected it, which is in the green color. And what we see is that the timing wise, we were getting around 16th of Jan. This is always plus or minus 2 days, trading days either side. And we have seen the market actually consolidate around this level. Now this is this smaller cycle within this. I was doing the low to low one. Now just moving back here, if we take this low, which is a really significant low, which took place 6th of January 2023, and the other low that took place was this one around 28th of April 2023, and then of course we had this big one-to-one price projection ABCD, which took the stock really high, topping around 19th of January. So if we just take this low and project it, so this low to this low and then project it forward, and what we get is here, and this is where we had another bottom come in, but this one actually stopped right at the 78.6% Fibonacci retracement. And if this is some sort of a cycle which is existing in this leg of Tesla Motors, and we just take this low and then we try to project it from this low here, we also get a date of 23rd of February 2024. So it all depends here which phase of the cycle we are in, and I'm just trying to find a low to low cycle operating in this move for Tesla. Now there is a possibility that Tesla could actually come all the way down to around 194 level and retest its breakout area. It could move slightly lower, it could come fairly close to it, perhaps not exactly, but that's something which is also possible, so we're watching for it. Below this we have of course this channel formation, and we also have the 1.272 expansion which comes around very close to this moving channel, and of course the channel is moving, so with time we could have slightly lower prices as well. But my likely scenario is that where we are, maybe Tesla begins to find much more support here. But if the overall market, we know that the market is at a tier at the moment, but if the overall market also begins to have a pullback, which pullbacks eventually happen, then this stock being a weaker than market stock, we'll have to evaluate the price action really carefully. And of course, as you guys know that from a weekly perspective, we have this possible ABCD, which all depend upon this point C here, which has the lows of 194 roughly. So as long as this point C is held, the ABCD actually projects higher. But if it gets taken down, so we'll have to actually readjust, and we'll have to see other pattern formations. On the weekly chart, we can also see we have this downward trend line here. Sometimes these really act as a magnet, so this one also comes around 175 or a little bit lower, depending upon the slope. And we'll have to wait and see. But the Tesla has been moving sideways for uh, since July of last year. So this could be because of a number of things. So we'll just take a look only at technicals for the moment. Okay, let's take a look at the Apple stocks. Here we go. So this is daily chart of Apple. We were looking for the market to come a little bit lower to around 170. It's between 170, 180, 170 was the kind of our range because of the 61.8% Fibonacci retracement, 78.6%. And also from this market symmetry perspective, we have had these fantastic ABCD moves, so there's a possibility it could get a little bit lower. But what the market has done is it has actually gone to the 1.61 around 180, did a double bottom, and it's just been on a tear. Look at these moves since last Thursday. These 3 days. Monday, which is yesterday, 22nd, and then last Friday and Thursday, just incredible. And that's why we have seen, especially last Friday, really incredible moves in Nasdaq, for example, and also S&P 500. And this kind of move sometimes, how quickly it was moving. Um, yeah, sometimes it's also possible to think of that maybe these are ending moves. But look, just really amazing. And of course, Apple is a pretty strong stock. So if the Apple actually moves higher, it is going to impact the broader indices on the positive side as well. Okay, so let's also really take a look at this on the weekly chart. Here we go. So on the weekly, the big resistance is this $200 per share level, and you can see the confluence of a number of things coming together here. I'm not going to go into the details, and above that, we have, once it takes that out, the next level comes around 220, 218, and I believe that might actually be the one-to-one price projection as well from this. Let's actually have a look. So that is, yeah, it gets very close to it. So that all depends on our assumption that this point here around 180 is our point C. So this is our leg A, B, C, and projects here one to one, and then we have the 1.618. So this is slightly a longer term target. But of course, the $200 per share level is something the stock really needs to clear on really with good closes on 2 consecutive daily closes. Quickly take a look at Microsoft. Microsoft, again, an amazing company, and the stock has been doing really well. Quickly take a look at the weekly. We had the $400 once it had cleared these levels around here in this big box, and this is where the stock is right now. So we are just watching the price action, and let's take a look at Shopify. Here we go. So the Shopify, of course, related to e-commerce, and just reached our target of 80. This was roughly our target, 78 to 80, and it's just consolidating here. Then also let's take a look at Amazon. This is the daily chart of Amazon, and here this stock, good thing is just cleared above the 61.8%, which was a pretty good resistance level, because the stock just went nowhere for quite a few weeks actually, and now yeah, it is getting supported by overall market as well, and looks like maybe it's heading to 163. That's the 1.618 x suspension of this one. Yeah, so this is what it looks like for this. Yeah, let's take a look at Netflix because we had the earnings come out today. Here we go. So this is daily chart of Netflix. The price is not showing any pre-market action. We do have something here post, which is 534. So it looks like the earnings were good, and that's why it's being reflected in the price pre-market. But what is really important is how the price will close tomorrow trading day. And here one of the things that we had been watching for was this $500 or $493 per share level, because this is 61.8% Fibonacci retracement. We had to wait for it for quite some time. Around here last year, 19th of July, we thought it just came close enough. It did a fantastic one-to-one price projection. ABCD down here right into 61.8% Fibonacci retracement of this swing, and the bigger one, the 38.2% Fibonacci retracement. And then the earnings came out around here on 19th of October, and boom, it has been moving in this wedge formation, and look, it broke out of it. This is the thing about wedge formations, triangle formations. When price move out of one side, then it's a pretty dramatic move. So again, good to see that it's actually broken above the 61.8% Fibonacci retracement. Let's add the 78.6%. So here we go. The 78.6% comes around 584 onto the upside. Next stock, let's take a look at NVDA. The NVDA story is really amazing. This stock, what it has done is, we thought this level of 493 or $500, roughly speaking, would be a pretty good resistance level, and it was, in the sense that the market just went sideways for a number of months actually. So it was a pretty strong level, and it just went into a trading range. We were also thinking that perhaps it'll just go and to about 38.2% Fibonacci retracement around $350, close this gap, and that did not happen actually. So this means the stock is pretty strong, and where it is now is basically, if you have this box theory, it's kind of like a Darwin box. You can Google about it. So it's a measured move. You take this entire range, and then when it has broken out of the range, you just add it to the top of the range, and we get a target of around $600 per share level. This is what we are seeing right now for this stock, and I believe it's got its earnings coming in February, because it's some time to go. So we'll have to wait and see. But yeah, the stock is really strong, and of course the artificial intelligence is really the buzzword these days. So these kind of stocks are doing pretty well. Microsoft is of course a big beneficiary with having a stake in the OpenAI. Okay, what is the other stock we can take a look at? Let's take a look at Roblox. There we go. So Roblox has actually been a little bit disappointing for us, because we really thought this point C would hold, but it didn't, and it actually went down to 1.618 expansion of it, and also a double bottom around here. So the stock is actually in a big trading range for quite a while actually, but the pattern suggests, as long as these bottom ranges are held, maybe it might make an attempt to 56 and to $60 per share level. Let's sort of quickly take a look at this on the longer term weekly chart. So here we go. The ABCD actually points a little bit higher. The 38.2% Fibonacci is higher, around 67. So interesting, but look at this. It's if you guys are familiar with the Wyckoff work, there's a concept of coiling or spring. It's just, to me, looks like a lot of accumulation, and if it eventually breaks out of it, I think the stock could be pretty good. Just my own personal opinion. Again, not a financial advice. Meta. Let's take a look at Meta. There we go. So Meta has gone and formed all-time highs. That's amazing. I think this stock really needed to see that. And look at this spectacular move since October 2022. in this short, this is what a V bottom looks like. It is a V bottom. I mean, this is classic textbook V. Look at this. And there are very few stocks, companies which can do that, and Meta happens to be one of those. I believe when well there were a number of things happening, and that's why the stock was down 78.6%, right to this from these highs from the IPO lows. And when somewhere around when Mark Zuckerberg changed his name to Meta from Facebook, of course signaling a change in the strategy for the company. But I wasn't really clear about the strategy, how the metaverse is going to work, and of course how much he was going to spend on metaverse concept and build out the metaverse and what it's going to take. And of course, a little bit early concept as well, how the metaverse is going to perform, how the monetization will look like. We are following the metaverse concept. That's why we take a look at Roblox, and Meta is actually another big player in the metaverse. And somewhere along the lines, he actually Mark Zuckerberg switched over, or he pivoted to more on AI, artificial intelligence, and that's where the big investors really began to come back into this stock, because it's understandable the kind of things, the amount of data Meta holds, they can do with artificial intelligence, and they can make their models really well. So all the positive things with the AI. Um, so I think that has led to this fantastic rally, an incredible one, just amazing, amazing. What is the other stock that we can take a look at? Yes, let's take a look at something which we don't often look at too much. Let's take a look at IBM. So this company has been there for quite some time. Uh, During its days, it has done some incredible things in its time. It's still, there's a new CEO which has been there for a number of years now, and he's making quite a lot of changes, and that's also reflected in the stock price. And also, this is one of those stocks which pays a pretty good dividend as well. So now where it is we have this 175. Could IBM ready to that? And it has done that. That's where it is now, pretty much there. And that completes this big ABCD price projection. And above that, we have some levels as well, which is 78.6% Fibonacci retracement. But waiting to see further price action, and look at this. It's just been on a tear since the beginning of this year, and especially last week. Look at this gap here. Um, you know, we have this kind of blow off kind of a move, and right completing at the ABCD. One has to really watch the price action really carefully for this stock over the course of next few trading days. Okay, yep. Let's take a look at Baba. It's also in the news. Okay, so Baba, here we go. So last year we were really looking for this Baba when it had held this 61.8% Fibonacci retracement, and then did a kind of a double bottom around here. There was a really good chance that this ABCD that we are looking at could in fact see the stock rise higher to around $140 per share level. Unfortunately, we did not see that happen, and this retracement, let's take a look here. This 61.8% Fibonacci retracement proved to be much stronger as a resistance level for the stock. And after that, it's just made, you know, lower highs. And what we are seeing now is here the stock jumped quite a bit today. It was up 7.85%. This is something which the stock has not done to the upside in a while, in a good while. And one of the things that I would like to show you is on the weekly chart. So I will be removing these patterns, because these do not hold now. So actually remove that here. And on the downside, the ABCD is much lower. I'm not sure whether now the stock will get to around $60 per share level. because of this gap formation and something in the news where Jack Ma and the other founder of the company put in like a large amount of money into this by buying their own shares back. So that's great news because that shows the confidence, and these guys just want to be in the business and grow this one. So that's good. What I want to point out is we are really going back into 2014-15 when this stock actually made an IPO on the New York Stock Exchange. And what it is it followed a typical cycle of the IPO. It had a rise, and then it just began to go below the IPO level. And what this stock likes to do is it likes to form this kind of a double bottom. So this is look uh, in 2016, February 2016, it formed another bottom around here, and then there was a gap here. It is the abandoned baby bottom formation actually from a candlestick's perspective, and then after that the stock just did not look back, so it's just been going up and up and up, formed a big top here in 2020, and then a equally impressive to the way to the downside. So this has always been, when I was looking at this, doing the study for this stock from a chart perspective, I thought that this sort of scenario is again possible because sometimes certain kind of stocks, they have a certain characteristic about them, and they like to do this kind of double bottom formation because another double bottom came around here highlighted in this box, and this is to me another double bottom as well. Perfect double bottoms are very rare, textbook kind of double bottoms, but this is a double bottom in my books. So looks like it that this stock, when it moves, when it starts to move to the upside, it likes to do a double bottom. And this might be one of those occasions as well because it came back really close to the price it had reached back in October of 2022, so quite some time ago. So really interesting how the stock is gonna perform, how the week is gonna close, and eventually if we begin to close above the $80 per share level, which is this 20-week moving average, that will begin to improve its momentum as well. So, and then of course clearing above the $87 per share level, it's gonna be taking out this swing. So things will begin to improve from a price action perspective for the stock. But this double bottom scenario is something that I wanted to bring to attention from a longer term perspective. And the stock is up for the week 6.63%, and I think for the day the stock is up about let's do this, is up 7.85%. So thank you very much for watching the video. Good luck and good trading. Have an amazing day. Speak to you guys soon.